Hey everyone, welcome to the show today. Today we have a special guest joining us, Kris Bennett. Kris is a self-storage managing partner at passiveinvesting.com, where he leads deal sourcing, broker relations, and overall strategy for their self-storage investment fund. Kris co-hosts the Storage Investor Nation podcast and weekly webinars educating investors about the self-storage industry. He's a graduate of UNC Chapel Hill, where he served as a fund manager for the university's private equity real estate fund. And currently, Kris resides in Charlotte, North Carolina, with his wife and 3 sons. Kris, welcome to the show.
Dave, thanks for having me. Glad to be here.
Yeah, awesome. So Kris, maybe we can start off, if you can tell us a little bit about your journey in private equity, self-storage, what really led you down this path?
Yeah, usually nobody starts out trying to get into self-storage. They kind of stumble into it through some other means, right? So that's kind of my story. Actually, if you rewind the clock a little bit, going back to 2007, I actually got my real estate broker's license in the state of North Carolina at that time, hoping to be a broker and go out and make a bunch of money and all that kind of stuff. And a lot of other people had the same plan because our real estate licensing class was like packed, like 200 people or something like that. But none of us knew what was going to happen, right? In 2008, 2009. So kind of weathered that recession. And some of your audience members might remember that time as well, as being really, really rough in the real estate industry. We basically shot ourselves in the foot is what we did to ourselves in the real estate industry. So fast forward, I realized, you know what? I actually don't like working in foreclosures and evicting people and all that kind of stuff, which is what I was doing basically at the time. I want to do something else. So I went to school, make a long story short, ended up transferring to UNC Chapel Hill, found out they had a real estate program there at the business school. I applied to the business school, got in, was part of the real estate program. And then they had a real estate private equity fund at the school. And that piqued my interest, but I didn't quite fully understand what it was. I worked as an intern my first summer there. And actually, to back up a little bit, I actually didn't like real estate because of my experience during the recession. I wanted to go do something else, something super nerdy and math oriented and all that kind of stuff. But just the way it worked out, the only summer job I could find was working for a private equity real estate firm that was buying multifamily assets pretty much in the Raleigh-Durham Triangle area at the time. So my eyes were opened to the possibility of raising equity, raising capital from investors and buying these large, 200-300 unit apartment complexes. And I was like, oh my gosh, you can do this. This is how it's done. I had no idea. My experience was single family homes up to that time. And it was all numbers oriented and just rates of return. And I love this stuff. This makes sense. So I applied to the real estate program. I said that already, but I applied to the private equity fund at the school. Made it to the fund, became a fund manager there, and we invested a couple $1 million into different asset classes, different types of real estate. So multifamily, office, hotel, some storage, and et cetera. Graduated, went to work for a private equity company. I call it a family office, but really small office in Raleigh, North Carolina at the time. And I was their quote unquote director of acquisitions. And that's just a fancy way of saying you're a bird dog, go find deals and let's get them closed. So we were looking for multifamily deals, pretty much in the Triangle area. So Raleigh, Durham, Chapel Hill, it's over in Charlotte. And I realized that it was really tough to make numbers work. And we closed no deals basically in multifamily for the first year. Had a few under contract that didn't work out. So we pivoted to self-storage. The guys I worked for owned, they built like maybe, I think it was 3 at the time, something like that, ground up small facilities. So maybe 15,000 square feet using SBA loans. So that was, what they were doing on the side, in a sense. We got into that. We pivoted to that and we raised a fund using CrowdStreet. I was able to compare the underwriting between the two, between multifamily and self-storage, just look at the industry as a whole. And I was like, man, there's such opportunity in storage. And I love this asset class. I love the numbers and the business, really the business model of storage. So that's how it all started. And then worked for them, was successful with them, came down to Charlotte because family is here. So we moved back to Charlotte in 2018, have been here ever since. And partnered up with John. Really, this is he and I partnered up about 2 years ago. John co-leads the storage side of passive investing with us. And then Dan, I've known Dan for a number of years. Actually, when he first started I went to his very first meetup ever in Charlotte. And that's where he and I met. We stayed in touch and Dan called me up and said, hey, what are you up to? We want to get into storage. Let's talk. So we did. And John and I came on under the passive investing umbrella, passiveinvesting.com umbrella. And have been rocking and rolling ever since. And that was earlier in 2021. So that's the whole story there in a nutshell.
Yeah, that's awesome, Kris. So it's interesting. You got really exposed to private equity very early on, and probably saw some of the potential benefits there. But personally, right, from kind of a wealth strategy perspective, I'm sure with a family of three and everything, you were interested in creating wealth for yourself and your family. So in addition to, kind of having an affinity towards the asset class, being kind of exposed to it and things. Did you have any contrarian views to Wall Street and how you wanted to build your wealth? Was there some kind of pivotal moment or anything that said, wow, I can really do something much different than what financials planners are talking about in this space?
Yeah, I have a different background. So what happened to me was, just to get personal here. So I actually worked in ministry for about 6 years full time. So some people understand that, some people don't, just basically working in a church. I worked for a Bible school is really what it was, but full-time ministry for about 6 years. We were flat dead broke. Right. And so it was a rough time, and transitioning from that to real estate, where you're actually running your own business. Essentially, you are your own boss, was a major transition. It's like, you're going to go be an astronaut and go to the moon. It's like, what do I need to do here? And I had no clue. So I read Rich Dad, Poor Dad, and I read a few other books, Gary Keller books, et cetera, about just building a business, a real estate business, et cetera. And that really opened my eyes, I think, for a lot of folks, but, that affected a lot of people when it came out. This is 10 plus years ago. So then I realized, oh my gosh, okay, I want to be in that quadrant. If you're familiar with Kiyosaki and his books and all that, I want to be my own boss, own my own business, and then have other people run it for me. And I had been striving for that for a number of years. I had no finance background, in other words. So coming from ministry, I had no finance background until I got to Chapel Hill, and I became an economics major. And I took several classes that had to do with obviously investing in the markets and all of those things, which are fantastic experiences. I don't necessarily knock the idea. I won't use a financial planner for myself, right? I have a couple of friends that are financial planners, and I respect them and respect what they do, but it's just not for me. Because I want to build my wealth through real estate. Now, do I own some stock and all that, and made some bets during, the pandemic and all that turned out well? Yeah, some didn't turn out so well. That's fine. I dabble a little bit in that, but I look to real estate as a real, because number one, I know it. And number two, it's something that I see as a better opportunity to make money. I have never, ever said that you shouldn't make money in stocks. You shouldn't do these other things, because there's plenty of people that build wealth that way. There's a lot of people who are fans of Dave Ramsey. Now, I don't subscribe to every single thing that he does or teaches or whatever, but there are good pros and cons to all that stuff, right? So can you make money investing in the market? Yeah. Can you make money investing in real estate? Yeah. What are the pros and cons of each, and what do you like as an individual? I tend to like real estate. It's a hard asset. You can see it, you can touch it, you can do whatever. I guess you can taste it, but you can see and touch it. It's a physical hard asset, and it's a way to really build wealth, and then obviously take advantage of the tax breaks that you get as well through real estate investing. Most people don't know you, but you do go to a financial planner, right? And they tell you, here's your mix of stocks and bonds, and based upon what your retirement goals are, how old you are, how much risk you like, how risk averse you are, et cetera. And they don't really recommend real estate, number one, because they don't get paid that way, right? So they don't make any money from suggesting real estate investments to folks, because they don't get paid that way. They're incentivized to do other things where they get paid. And that's fine. That's their incentive. And people know, like, and trust some financial planners, and they go that direction. That's fine. But I think real estate is something where, if you look into it, there are a lot of benefits to it, and a lot of upside for the risk involved in investing in real estate.
Yeah, no, absolutely, Kris. Totally with you there. So how would you define then? It's interesting you come from a ministry background as well. So how would you personally define wealth, and what does wealth really mean to you?
That's a wonderful question. I love talking about this stuff. So the book of Proverbs talks about wealth and being both a kind of like a double-edged sword, right? Because if you're poor, you can't take care of your family. The Proverbs talks about that, where you have no friends, you can't take care of your health. Like, there's a lot of downside to being poor. And I lived that. I remember getting sick in 2001 with really a life-changing condition where we didn't have health insurance, and we had to rely on other folks' help and just charity and whatnot to pay bills, et cetera. That was a really hard place to be in, and I'd never, ever want to be there. And I never want anybody else to be there. The other side of the coin is wealth also leads to, or could lead to, a lot of pride. The Bible is obviously very important when it talks about this stuff, and you asked a question along these lines. So it can lead to somebody saying, you know what, I rely on my wealth, not on God, etc., for my life and wellness and health and well-being, right? So it's in a sense a double-edged sword, but it's better to have the wealth you need to have to meet your needs and to help others at the same time than it is to be poor and not be able to do all of those things, right? I know some people out there might, well, we'll look at Jesus, look at all these other things, and we won't go down that rabbit hole. But the point is Proverbs gives you general wisdom for your life. And overall, it is better to have what you need to help others as well, to help yourself, obviously, to help others, than it is to be on the other side of that coin. I've lived both, and I would never recommend living with either a poverty or mentality or a poverty lifestyle. If you could do anything you can, do everything you can to get out of that situation.
Yeah, absolutely. Living a life of abundance is key. And, it's really great because, wealth, I would align with that as well, right? We see wealth overall is like a holistic vision, right? Because you can make a lot of money, and then we know plenty of people who make a lot of money, but they might not have healthy family lives. They may not be healthy themselves, right? And have different issues and things like that. They may not be having an impact or actually even having a purpose, right? Even having a freedom of purpose, right? So I think wealth, to me really encompasses a lot of different things. It is very holistic and what you can achieve. Just because you're a high income earner doesn't truly mean, you're wealthy. So, that's what we're trying to,
Yeah, that's exactly right. I mean, there's a story in the Bible about that where basically he's a farmer. He has a big crop and he says, well, what am I going to do? Well, I'll build a big barn, store up all my stuff, and then I'll live life easy until I die, basically. And the Bible says, well, you fool, you're going to die tonight. Then who's going to get what you've earned? So that's the idea that we have in mind, is that, hey, we build wealth, build as much as you can, be a millionaire, be a billionaire, build a company, employ people, do all these things, give to charity, fund good works. All those kinds of things are wonderful. There's nothing wrong with them, but keep in mind that we're all going to die. We can't take it with us, right? So we have to live for the hereafter. And that's how I look at it. And it helps bring balance to all that. You can be really wealthy and have, like you said, a bad family life, a bad marriage, kids that hate you. Well, what's that worth, right? You can be really wealthy and then suddenly lose your health. All the money in the world isn't going to give that back to you. So there are other things that are more important than building wealth, although building wealth is important.
Yeah, absolutely. So Kris, tell us a little bit about, maybe some folks are not necessarily familiar with the asset class of self-storage, right? They might come at it from real estate or something. So, what would you tell someone who is new about investing in self-storage? What are some of the attributes about it and the things, of why you like it?
There's a lot. Actually, it comes down to a couple things. One is the opportunity within the space. A couple things that we look at. One is the opportunity within the space. So if somebody's coming maybe from multifamily, just to use that real quick as an example, you look around, you're driving around in your car or whatever, you see all these big, nice multifamily properties, and you start to realize that, okay, these are actually owned by very large corporations or sophisticated owners or private equity groups, et cetera, right? And the majority of them are 75-ish, let's call it 75-ish% are owned by those types of folks. Whereas in storage, it's the opposite. Only about 25-ish% are owned by larger, sophisticated private equity groups. The remaining 75% are owned by what they would call mom and pop owners, where they own maybe 1 or 2 locations or less than 10 locations. So there is a tremendous opportunity within storage to compile or put together a portfolio of nice cash flowing properties in different metro areas in good growing markets. So there's the opportunity there. The second thing is, one thing that I like personally is you're dealing with folks who are storing stuff. So if they don't pay, you auction their stuff. You don't foreclose on them, which is the industry I was in the past, right? I can tell you some really bad stories about those situations. So when somebody doesn't pay, you auction their goods. People think of storage wars on TV, although that's all staged and whatnot. The idea and the concept is still the same. You just auction off goods, right? So there's no sob story. You're not the bad guy. You don't have to go to court. It's a whole different process. Another great thing about it, actually, on the positive side, is the cash flow. So the break-even point, right, is usually around 30-ish%. So your margin is roughly, it depends on the size of the facility, the kinds that we're buying are roughly 65 to 70% profit. So in other words, for every dollar of revenue that comes in, about 30 cents, let's say 30, 35 cents goes to cover the expenses. Beyond that, everything else, 70 to 65% is your net operating income. So your break-even points are much lower. Your risk is much lower. The foreclosure rate in self-storage is near zero because of that. So if you think about a risk-adjusted return, storage is right up there with anything else you might think of when it comes to industrial or multifamily, et cetera. And in fact, exceeds those in some ways. So those are some of the pros I love about self-storage.
Yeah, absolutely. And, certainly being very late in the cycle right now, just at the beginning of 2022 here, lots going on, inflation happening in the economy. And, what would you say in terms of, getting into this asset class now as, potentially a recession resistant asset class to have as a mix in your portfolio?
Absolutely. So you mentioned the recession resistance and where we're at in the cycle right now. I guess I take it on that one. I take a little bit of a contrarian view. I don't think in storage per se, we're late in the cycle. I think in some sense, we're just getting started. I wrote an article for the passiveinvesting.com club that goes out to all the folks who are on our mailing list, where I talked about why now is the time to get into self-storage investing. And again, it's kind of like I'm answering this question. It's kind of like you're asking a barber if you need a haircut, right? They're always going to say yes. So I understand that for your listeners. You want to go out there and get your own objective information, do some research for yourself. So don't just take my word for it that now is the time to jump in. With that said, in that article, I talked about the last two recessions. So during the pandemic, right? So 2020 to 2021, there was a brief recession in there, and how storage performed during that time. And then also during the last recession, 2008, 2009, how storage performed during that time. Won't get into the weeds on it right now, but in both recessions, it showed that storage returns were at the top, if not the top, topping out a lot of other asset classes besides maybe mobile home parks, and I think it was data centers, but definitely at the top. This is according to REIT.com data. So not just opinion or somebody writing some article where I read it and copied and pasted what they wrote. No, this is actually looking at hard data. So storage weathered two storms there. Rents have been on the rise according to Yardi data, Yardi matrix data as well, and not showing any signs of retreating at this point in time. So in all the top MSAs that they target. So that's one point. The other is, where are we at in the cycle right now? Well, in the article, I talk about other groups jumping into the space. And it seems like nearly every week I read another article about another larger private equity firm or group out of New York or wherever that are getting into the self-storage business because of the data that backs up all the things that myself and others are saying about the asset class. So for example, Sequoia, Bill Gates, his private equity, his family office jumped in. They bought a ownership share of Storage Mart, which is one of the larger top 10, I think it is, operators out there. They bought into that along with the Singapore Sovereign Wealth Fund. They bought into Storage Mart. Blackstone has jumped in. KKR, it's been in the news. If anybody can look it up, KKR self-storage. Just type that into Google real quick and you'll see they jumped in to the space this last year, buying up, I think it was initially 5 facilities and they bought more. They just closed on one here in the Charlotte market as well, in a good area in Charlotte for like $20 million or something like that. So they are now jumping into the space. So where we're at in the cycle, I think we're in the very beginning. If you're looking at buying and getting into the business and you're going to acquire a portfolio of properties, there is going to be an exit for you and for us in, call it 3 to 5 to 7 years. All of these groups that are getting into the business now and others that will get into the business over 2022, you'll see it, mark my words, there'll be other groups that jump in. Those are your potential exits, right? So if they're getting in, it doesn't mean it's overheated. Remember, 75% or so facilities are owned by mom and pops or folks who just own 1 or 2 locations, and they aren't always poorly located. They're nice locations. They could be coming from like the construction world or whatever. They own some of the business and they want to build self-storage, and they did it and they built it and they have run it for 5 or 6 years or 10 years and they want to sell it now. We just closed one. This is December. I think it was December 16th. We closed one here in Charlotte. It's about 100,000 square feet, single story drive up. That's institutional size in a good market. owned and run by the same family for the last, I don't know what it was, 20 plus years, 30 years or so. And they were true mom and pop, right? And so it's family owned and we bought it from them. So that is an example of the opportunity that's within this space. So I kind of trailed off a little bit there, but hopefully it gave some good
that
insight
makes
for your
sense.
folks.
Yeah. And I think what I was referring to is really just the overall economic cycle, right?
Got it. Yeah.
And the sense that, storage is a great asset class to get into now, right? Before we take that next dip. I mean, if you're heavily concentrated in the stock market right now, this is an excellent asset class to diversify, which has a lot of stability to it for all the reasons, that you've been pointing out. I was going to also ask Kris, especially if people might have invested in real estate before, multifamily or some other asset class around there, and they come into storage, what is your typical business model? Right. I mean, in a multifamily, a lot of people will do value add is the business model where you can do improvements and everything. Does that hold true to self-storage, or what is the typical business model, or, the types of assets that you're looking to acquire?
Yeah. So just generally speaking, a good business model, a common business model that you might see in the storage acquisitions world is to buy a facility with some extra land where you can then add more units, provided there's demand for more storage units in that market. So that's a very typical business model that people try to use to kind of quote unquote add value. Some really simple ways to add value is, like I talked about, that mom and pop we just purchased, taking that and actually adding on some technology to it and adding on good property management best practices and adding on the ability to actually rent online. Some folks, they don't have a good website. You can't rent online. You have to call or you have to stop by the office, et cetera. So there's a couple ways you can do it there with online marketing, having a good website where you can actually rent a unit online. The customer can sign a lease online and move in without actually having to talk to a manager. We could talk more about that as well, because we have a specific way that we do all that. We're in our facilities. But then obviously the construction, the adding on some of these facilities, that the one that we just bought, they're all gravel. So you want to go in there and add pavement, right? So you want to pave the drive aisles. You want to freshen up the paint, freshen up the landscaping, make it look like somebody actually cares about the facility. And those are ways to add value. Beyond that, some simple things you could do is raise rents. A lot of these mom and pops, they're under market right now with their rents. Maybe they're at $100 for a 10 by 10, something like that. And the market is at 125. And some of your current customers who've been there for 10 years or 5 years or whatever it is for a long time, they've never gotten a rental rate increase. That is extremely common in the storage world, to have folks who are there who have never gotten a rental rate increase in 2, 5, or 10 years. We see that all the time. So the value add is a little bit different compared to maybe multifamily or retail, where you go in and you make the surface, like you add countertops, you put in carpet, you make it look visually appealing to the eye, right, to the tenant. In storage, you're just renting a garage, right? So you open the door, you see the concrete floor, and it's just a garage. So how do you add value there? Well, you actually implement best business practices. And then if you can add in more units or more parking, those are other ways to add value as well.
Yeah, no, absolutely. I mean, I think it's so amazing too that the cost ratio is just so low in self-storage. And the fact that you can go in, nowadays, right, and you could just come in with your app and rent a unit, right, with so tell us, I mean, typically how many people, from a management perspective of one of these properties, how many people do you really need to manage that? I mean, in terms of employees and everything.
Yeah, as far as actual manager on site, 0. As far as boots on the ground person going by to check on things, one person, maybe 1 to 2 times a week. And that's it. And that's how we operate. So people might be kind of having a brain, fart for a quick second and saying, wait, what are you talking about? So I remember going to one facility that we closed, this is a couple of years ago, where the manager on site was one manager and she was managing 400 units, right? So in multifamily, you might have, for 400 units, 400 doors, you probably have at least 3 people, right? You have a full-time manager, a leasing person, a part-time leasing person, then maybe 2 or 3, probably 3 maintenance personnel as well. So maybe 6 people total are on the payroll. In storage, you just need 1, right? If a door breaks or something happens with the hinge, the manager doesn't go out there and change those things. They actually call a third-party maintenance company that comes out there and fixes all that kind of stuff. So the manager handles that stuff. Nowadays, go to any website, any of the REITs, Public Storage, Extra Space, CubeSmart, go to the website, type it in and look, and it'll say on there, contact-free or contactless or no contact move-ins, right? So, and if you go and you visit, what that means, let me back up. What that means is you can rent online, make your payment online, get your unit number online, go to the facility, never actually stopped by the office and talk to the manager. COVID pushed everybody into that. And even other operators out there, not just the REITs, but there's other operators who are advertising that on their websites. It's almost like a new thing, but it really isn't new. It's the concept of unmanned self-storage. COVID, again, pushed everybody in that direction. And public storage, they actually, at the last, it's called SSA, the Self-Storage Association. They have a big conference usually twice a year, but their biggest one is in Vegas around September every year. So this last September, I think it was September, October, Joe, and I can't remember his name now, the last name, but the CEO of Public Storage was the keynote speaker. And I have photos of his presentation where he describes their strategy going forward. And they said they rented, I forgot how, it was hundreds of thousands of units during the pandemic in 2020, right? 2020 going into 2021 for about a year stretch there when the pandemic started. And then when it didn't really wind down, but just basically a year period of time there, they rented something like 600,000 or 700,000 units. And over half of those were no contact, no manager on site. Nobody didn't talk to anybody. That's how many folks they moved in. And they found out the data shows that those people stay longer. They pay generally more. The collections are down because they use a credit card to pay online. And so it's just auto drafted every month. And they take tenant insurance. That's another way you can add value, is by bringing tenant insurance to folks who don't have tenant insurance. So long story short, they outline their entire strategy of going contact-free at their sites. My partner, John, and I, we stopped by we were secret shopping a facility in a particular market. It was a public storage facility. The manager did not know that the building was for sale, that the facility was for sale. We stopped in, we talked for about 10 minutes just to kind of, ask about rents and whatnot. On the way out, I'm walking out, turned around to walk out the door. He says, "Hey, by the way, when you want to rent, you don't need to come see me. You just go online. You can rent there. You go straight to your unit. You open the door. There'll be like a little welcome bag in there with a lock and all that kind of stuff. You don't need to talk to me at all." And I'm like, "I don't got to talk to you at all." He's like, "No, not at all." So I'm in my mind, I'm thinking, then why are you here? What's the point of having you here? And he's more like a caretaker is really what it is. He's not really a traditional manager. So Public Storage has outlined their strategy that they're going in this direction in a lot of their facilities, in a lot of their markets. There's other folks out there doing the same thing, using kind of a hub and spoke model, buying one facility with one manager and then buying more in a market and using that one manager to kind of roam between the facilities. Yeah. So that's the way that we manage. No one on site. We have a boots on the ground person that goes by once or twice a week, sometimes 3 times a week, depending on the size of the facility, to check locks, to check the rent roll, to overlock people, that sort of thing, to kind of handle all those tasks. And then to take calls and rent, people go to our website, or they call our call center. The phones get answered. They can rent a unit, get all their questions answered over the phone, and then get to the facility and move right in without ever having to actually talk to anybody or even sign an actual physical piece of paper. We think that's where the industry is going, led by Public Storage and others. It sounds new, but it isn't new. The pandemic pushed everybody into this. And so we think it's going to stick around for obviously, it's the future of self-storage.
It's the future. Yeah, 100%. And it's just so incredibly efficient, right? And if you've ever run a business and you just think about the simplicity of this business and the profitability, the gross margins on that, and the stability as well. Like you said, just having that asymmetric, risk return profile is really huge in self-storage. Yeah. So that's really great background. Appreciate that, Kris. So back to you for a second. Can you tell us, clearly there's a lot of real high performers in the space of, private equity and these types of assets and running businesses. So can you tell us any habits that you've developed from kind of a personal development standpoint, or what is the one biggest practice that you think has, yielded success for you?
Yeah, I think a couple of things. One is I have a morning routine that I follow every morning. So I read the book, The One Thing, and by Gary Keller, and I read that years ago, but I've listened to it numerous times as a refresher. That's a wonderful book. Essentialism is kind of the same idea, or just packaged a little bit differently. So if anybody's interested, check out those 2 books. But he talks about a routine that you would have in the morning. And I adopted what he talked about in that book. And so I follow that routine. Now, obviously some days, you get busy or whatever, and you don't always follow it. I don't beat myself up over that. But the point is I know what I'm doing in the morning. I do this, this, and this, and I follow that routine. And that helps keep me on track to what we need to do to build our pipeline, et cetera. The second thing is, I think, finding good partners. If you've ever read or heard the book Rocket Fuel, I think that book really crystallized and said a lot of the things that I think people in the business world and people who want to run their own business needed to hear, and that I personally needed to hear and understand, that it's really good to have a partner or somebody who offsets the things that you're not quite as good at. So there's no way that we could have launched a successful fund and found the deals that we found and closed on. I forgot the number is now, but by the end of February, we'll have closed on, if everything closes, obviously, that we have in the pipeline, we'll have closed on I forgot, like $80 million or something like that in storage, which is fantastic. That's phenomenal in about 8 months, six to 8 months, something like that. So that is tremendous growth. And there's no way that I could do it on my own. There's no way my partner could have done it on his own. It's us two, John and I, working together to lead the storage team. And obviously the guys at passiveinvesting.com providing all of the partnership benefits that come along with it, with guidance, et cetera. So the five of us obviously building this arm of the company, but then my partner and I, John, him being the finance accounting guy, me being the guy, obviously I like to talk a lot, right? So me being the broker relations, kind of keeping the pipeline going, those sorts of things, sourcing the deals, being that point person, I think we make a good combination. So that teamwork, and then I think the consistent, or at least very consistent, semi-consistent routine that I have in the morning of knowing what needs to get done in order for us to find success.
Yeah, that's great. So if you could give just one piece of advice to our listeners about your personal wealth trajectory over the years, what would it be?
One piece of advice. I think education really, really helped me, coming from the ministry background, not having gone to college, right? Not understanding anything about finance or business, and then jumping into it and kind of stumbling around a little bit, but then obviously being hit by recession, something you can't control. And then going to school and getting an education and learning about all these things that go along with investing. It really, I think, transformed my life and my thinking. And I'm not saying everybody needs to go to school. And I know some listeners may not like the idea of going to school, but for me, that's a contrarian view that I hold, that I think if you utilize and take advantage of the opportunities you have in school, it can actually change your life for the better. But beyond that, I think generally speaking, you can get educated by just reading a lot of books, going and meeting a lot of folks at masterminds, paying for coaching or mentoring, leveling up yourself and your education, your understanding of whatever it is you're trying to learn about, whether it be real estate investing, how to start a YouTube channel, or whatever it might be, fishing, whatever it might be, actually getting that education you need to get to that level. If someone comes to you or I or anybody else, right, and says, hey, I got a great opportunity for an investment with you, with me, I'm looking at this deal, et cetera, but they can't speak the language, they can't define to me what certain rates of returns are, I am losing, all my trust is gone at that point, right? I'm realizing this is not the partnership for me, right? But if you can understand what you're talking about, when it comes to vocabulary, the words, obviously the verbiage, et cetera, you obviously are doing the work, of course, but you're out there hustling and educating yourself and growing in that respect. I think it's going to help a ton as far as wherever it is you can see yourself now. You want to grow wealth. Okay, how do I get there? I need to be around like-minded people. I need to grow, educate myself and grow my knowledge base in order to get there and be like these folks who I want to emulate. So hopefully that makes a lot of sense there.
Yeah, it makes a ton of sense, Kris. And, it definitely resonates, right? I think as part of our overall wealth strategy framework, we talk about education and increasing your, financial IQ, your mindset IQ, your health IQ, all of these things. And what's interesting is, luckily, you had the opportunity to learn about some of these things around the asset class and private equity kind of early on. But a lot of us are not really necessarily exposed to that, right? We're hearing things from Wall Street and what our parents taught us about how to save and put money into 401ks and do 529s for your kids and things like that. And I think a lot of this education, right, really comes from, you have to look for it, right? You have to look for things like, different podcasts, alternative sources, right, of educational materials. You talked about some great books that are out there and some of the best ideas. I mean, you think about it, if someone, writes their life story in a book, and you're able to, read that in a couple of weeks. I mean, think about how much information you just downloaded, right?
Yeah.
It's really phenomenal. So 100% with you there in terms of education. I think that's fantastic. Kris, it's really been a pleasure to have you on the show. I think you've provided a lot of value to the listeners, and really help educate folks on the self-storage asset class, as well as, your personal journey and what that could be for others. So do you have any place that people can follow you, or any resources that you'd like to share? Where can folks, if they want to reach out and get in touch with you?
Sure. Yeah. 3 places: 1, LinkedIn, 2, Facebook, and 3, our website, passiveinvesting.com. So always happy to connect there. Again, we put out a newsletter every month, both an email version and a physical hard copy version. And I write articles in there pretty regularly about self-storage and the asset class, et cetera. So always happy to connect online and social, and via our website.
Awesome. Kris, thanks again for being on the show today.
Appreciate it, Dave. Thank you.
All right. Take care.